Hello, friends and family of Wood Financial Group. Wesley Wood here, president of Wood Financial Group. Thank you for clicking on this video. The purpose of today's video is to talk about what's going on. This morning, the Dow Jones is opening up 800 points down, mainly caused by the Russian invasion of Ukraine. So I thought it was important to talk about it and what we think is happening, but also what it means to your accounts here that we're managing for you. You know, with gas prices spiking, going up over $100 a barrel, that puts a lot of stress on the economy and on people's finances, which causes the market to potentially drop. Also, there's other factors that are happening with the markets. The Federal Reserve is committed to increasing interest rates, which again increases borrowing costs, which is going to cause some uncertainty in the markets and some volatility. There's a lot going on right now, and we've been talking about it with you guys that there's probably going to be volatility in 2022, and here we are right in the middle of it. So what does that mean to you guys? Well, first and foremost, if we're managing your money, we've probably taken a stance of being more conservative with it than perhaps where you were before. Meaning we went from the accumulation growth investments to more income, interest, and dividends. And probably a portion of your money is actually insured, which means it can't lose a dime at all, no matter how much the market crashes. Then the other portion, perhaps managed at TD Ameritrade, is more like a fixed income portfolio, meaning that it's down right now for sure. The value is, but one thing that we're always looking at that's very important is that the interest and dividends that's currently being generated has not changed one bit. So what does that mean to you? If the interest and dividends haven't changed, then what we can do if you're not spending those interest and dividends is we can take those and now reinvest back into these securities that you have and basically scoop up some stuff that is a little bit less expensive and increase your income over time. If you're spending your interest and dividends instead of reinvesting it, then nothing's really changed. The value of the portfolio is down, but most of the securities that you have in there holding to maturity will get the par value back as long as we hold it to maturity. Obviously, as your money manager and our third-party money managers, we're always looking at the investments that are in the portfolios that are the non-insured portion and making adjustments as this volatility spikes. But if you have any questions about your portfolio or any questions just in general about what's going on, please call our office during these crazy times. Give us a call at 826-5749. Again, 826-5749. We want to be with you during the really good times, but also during these stressful times as we're maybe seeing some of your portfolios go down in value. Thank you for tuning in. I hope this video helps maybe calm your nerves a little bit, but obviously we're here to help if you're still concerned. And if you feel like you need to maybe take less risk in your portfolio and maybe can't stomach all this volatility, then there's nothing that stops you from reducing risk. Maybe moving from some of the non-insured to the insured or vice versa, depending on what you want to do. So give us a call. We're here. Again, thank you for tuning in, and I hope you have a great rest of the week.